So, guys, we are going to start with the second part of chapter 3. And basically, what we're going to cover this week is dealing with creating the financial statements and then preparing what we're going to call closing entries to clean up the books so we can start again for the next period, the next year. So what we talked about in the beginning of chapter 3 was we created a trial balance. We learned about creating these adjusting journal entries that happen at the end of the period in order to have accurate financial statements. Once we created those adjusted journal entries, we then created an adjusted trial balance. Now, it's from this adjusted trial balance that we have everything we need, pretty much, to prepare financial statements. So I want you to see this adjusted trial balance. We always start with our assets, and then we have our liabilities. Then we have our stockholders' equity, our dividends. Then we have our revenue and our expenses. So we're going to talk about how we prepare these financial statements. The bottom of the adjusted trial balance, starting with revenues and then working our way in the expenses, will give us the information to prepare an income statement. This section right here will give us the information we need to prepare the statement of stockholders' equity along with the net income from our income statement. We'll need that to prepare our statement of stockholders' equity. So we always start with the income statement, and then we do the statement of stockholders' equity. After that, we create our balance sheet. And you can see our balance sheet shows up here, our assets and our liabilities, along with the stockholders' equity section. So here is our income statement. As you see, the income statement only contains revenues and expenses. The statement of stockholders' equity deals with the changes that occurred with common stock during the period, the changes that occurred in retained earnings, which we know begins with the beginning balance. We add our net income, we subtract our dividends. That is it. The statement of stockholders' equity. Then the balance sheet has our assets, our liabilities, and our stockholders' equity section. And we know our assets will always equal our liabilities plus stockholders' equity. Then we have another financial statement called the statement of cash flows. So this statement of cash flows really gives us information pertaining to the activities that came, the cash in and cash out that involved cash. And we break it into 3 activities: the operating, the investing, and the financing activities of a company. So here's our little information for to help you. As far as this question, which financial statement would include a line for net income? Is it in the income statement? You better say it is. But there's something else that also includes a line for net income, guys. What is it? Any ideas?
A and B.
A and B. You are correct. It is A and B because the income statement has net income, but the statement of stockholders' equity under the retained earnings section has a place to add our net income, and then it has a place where we subtract our dividends. So those are the financial statements. What we're going to do now is let's take some time and let's look at preparing some financial statements based on the homework. So, Boilermaker Unlimited specializes in building new homes and remodeling existing homes. Remodeling projects include adding game rooms, changing kitchen cabinets and countertops, and updating bathrooms. Below is the year-end adjusted trial balance of Boilermaker Unlimited. You see here, guys, we have our assets first, then on our, as debits, then our credit is this accumulated depreciation, which we know is a contra account to our equipment. We have our liabilities. Then we have our stockholders' equity section, which includes our common stock, our retained earnings, and dividends. Then we have our revenues and our expenses. Now, we are required to prepare an income statement for the year ended December 31st, 2021. Then we'll prepare our statement of stockholders' equity, and it's giving us some information. It's letting us know the beginning balance, during the year the company issued additional common stock for $30,000. It's telling us this $30,000, of course, is included in this $200,000 figure, which of course it would be because this includes all the transactions that happened during the period. So we know from that our beginning balance in common stock is 170 because it's telling us part of this $200,000 figure is the company issued additional common stock for $30,000. And then it wants us to prepare a balance sheet. So what I want you guys to attempt on your own, you can pull up your account here or your homework, is I want you to try for a couple minutes and work on the income statement. After you do the income statement, then I want you to work on your statement of stockholders' equity. Then we'll work on the balance sheet together. So I'm going to turn off the recording for a couple minutes just so you have time to work on. So in this particular adjusted trial balance, we had two types of revenues. The new construction revenue of $450,000 and our service revenue remodeling of $280,000 for a total revenue of $730,000. Then we had 7 expenses. Now you know it's an expense because it's at the bottom of that adjusted trial balance, and they always have the word expense in them. We show our salaries expense, our supplies expense, our depreciation expense, insurance expense, utilities expense, interest expense, and service fee expense for total expenses of $644,000, with our net income being $86,000. So that's one place our net income shows. Then, as far as our statement of stockholders' equity, we're going to add our net income into the retained earnings portion, as you see here, and we will subtract our dividends under the retained earnings portion. So we know our balances. It told us the company had issued additional common stock for $30,000. So we know that the ending balance in the common stock was 200. Because they told us 30 was issued during the year, we know what our beginning balance would be. Then what's shown on the adjusted trial balance is our beginning balance in our retained earnings. We will add our net income, subtract our dividends to have an ending retained earning balance of $91,000. And you just carry over the various stockholders' equity totals to have total ending balance of stockholders' equity of $291. These three bottom numbers will now be part of our balance sheet. So if we go to our balance sheet, we take our assets from the adjusted trial balance and our liabilities, and the ending balances on our statement of stockholders' equity will be transferred over to the stockholders' equity section in the balance sheet. Our assets of 505 equal our liabilities plus our stockholders' equity. Next, this gives us the year-end financial statements. Oh, we can't do that one yet. I haven't gone over that. So this problem here, question 4 through 8 in your homework. Crimson Tide Music Academy offers lessons in playing a wide range of musical instruments. The unadjusted trial balance as of December 31st, 2021 appears below. Then they provide us with our adjusting journal entries. And what we are supposed to do in just the beginning is to enter these unadjusted trial balances. Then we're supposed to enter these adjusting journal entries. Now there is a final spot of enter closing entries, but we're not there yet. So what you're supposed to do here is take these balances and apply them appropriately to each account. So if it says common stock of 79,000, we will go over here to our common stock beginning balance 79,000 credit. Again, when it says that the service revenue is 42.2, we're going to go down to our service revenue account and put in our 42.2. So the first thing you're going to do is add all of your unadjusted trial balance figures. Once you have done that, you are then going to post your adjusting entries. For example, our salaries expense in our unadjusted trial balance shows 24.5. So our salaries expense here shows 24.5. Then you see here we have an adjusted entry A, a debit to salaries expense of 2,100. You see here we did an adjusting A 2,100. So don't worry about these closing entries because we haven't gotten there yet. But this is kind of putsy work. However, it's important that you go and you post appropriately a debit or a credit to these accounts, and then you post your adjusting entries. After you're done there, make sure you save this because we're still not done with this problem yet. But at least you can start doing those two pieces. Do you see what I'm doing? Now we can move on, but what I'd like you to do is, let's take 5 minutes and do this while we're all together. Post these and then post your adjusting entries. And then from there, we will together go and create your adjusted trial balance. So I'm going to turn off the recording again. I'm going to give you 5 minutes, or you guys are going to let me know when you want to start up again. Okay, so for this particular problem, the key is to make sure you post the unadjusted trial balance to the various accounts. And then the next step was just to post the adjusting journal entries here, the A through F, to the accounts. So once you do that, we've got new balances. All the new balances in these accounts will then be used to create the adjusted trial balance. This adjusted trial balance from there is where you would create your income statement is first. Then we would create the statement of stockholders' equity. The adjusted trial balance gives you the common stock of 79,000, the retained earnings of 19,700, and it does not show there were dividends. So you would put those balances up here. And the reason the common stock, the balance is up here, is because they didn't add any purchases to common stock during the period. The retained earning balance is up here. We know you add net income, you subtract dividends. I did not see any dividends in our adjusted trial balance, but we will add our net income from our income statement to come up with our total stockholders' equity. From there, we will create our balance sheet. All of the assets and all of the liabilities come from the adjusted trial balance. The stockholders' equity section will come from the ending balances. Common stock, 79,000, retained earnings, 30,100. And so all of the balance sheet comes from your adjusted trial balance along with your statement of stockholders' equity. That is where we're at now. So the next step is to understand that the adjusted trial balance is everything you need to create the financial statements. So we went through all of these, the accounting cycle, to create with the purpose of communicating information to the end user. After we have done that, we have a couple more steps that we need to do in order to get our books ready for the next accounting period. Now, these next couple steps are called the closing process. What does this mean, the closing process? Well, it's pretty simple. We know the income statement is used to show the revenues and the expenses that have been earned and incurred during a specific period. We need to close out or zero out the revenues and close or zero out the expenses so we can start fresh for the next accounting period. Now, if you think about it, think of our retained earnings. Don't we add our net income to our retained earnings on the balance sheet to show the beginning balance of retained earnings plus our net income minus any dividends? And then we end up with an ending balance in retained earnings. Well, this closing process is basically going to zero out into retained earnings these accounts we call temporary. Temporary accounts are revenue accounts, expense accounts, and dividend account. If you think about it, the revenues minus the expenses are net income, and they go into retained earnings ultimately. So we're going to zero out, transfer all those balances to retained earnings, and then create an entry to zero those out so we can get ready for the next accounting cycle. How do we do that? Well, we know revenues have a normal credit balance. But to zero it out, we debit our revenues and we put them into retained earnings. We credit retained earnings. It increases our retained earnings. Then we take all of our expense accounts that have normal debit balances and we credit them to zero them out. And we take the total and debit retained earnings, which expenses are going to reduce our retained earnings. So this zeroes out our revenues, it zeroes out our expenses, and all dividends that have a normal debit balance, dealer, DEA dividends, debit balance, we are going to also zero them out, which means we credit retained earnings to zero it out, and we debit it into the retained earnings, which reduces the retained earnings balance, because dividends are those monies we give back to the shareholders to take into a portion of the profits, since they are the investors. This right here takes what we call temporary accounts. Why are they temporary? because we don't say our revenue since for 10 years now is this. We say our revenues for the period, and then we need to zero them out so we begin again. Same with our expenses, and same with our dividends. The permanent accounts are our balance sheet accounts. Our cash continues with a running total, a balance that continues. We don't go to zero at the beginning of each year and start our cash again. It just continually flows to the next period. As would our equipment and our receivables and what we owe the bank. Those are permanent accounts. They are not ever closed out. They keep a running total. So you see here, we started in this example, retained earnings with a zero balance. We added our revenues, subtracted our expenses and our dividends to give us a new ending balance in retained earnings. Retained earnings is a permanent account. Students believe that closing entries are meant to reduce the balance of retained earnings to zero. No. Remember that retained earnings represents the accumulation of all revenues, expenses, and dividends over the life of a company. So, in this example, getting back to our homework problem here, we want at the end of the period, after we've created all of our financial statements, we will then close out our transfer to retained earnings, our revenue accounts, and our expense accounts. So you see here in our adjusted trial balance, our revenues need to be closed out to zero. Our expense accounts need to be zeroed out. If we had dividends in here, we would zero those out also. And all of these will flow into our retained earnings account. So once we do this, we will no longer show on our closing trial balance any temporary accounts. We won't have revenues or expenses in here because they will all have been zeroed and transferred to retained earnings. So as you see here, the first journal entry is to close out our revenues. We're going to debit service revenue for $45,500. We're going to debit interest revenue for $800. And we'll credit retained earnings for $46,300. Let's see if that's how we did it. What this will do is zero out our revenues, increase our retained earnings. Then the next journal entry we will do, we will take our expenses. We will credit these expenses because the normal balance is a debit. So we will debit our retained earnings for the total. We will credit our salaries expense for $26,600. We will credit rent expense for $5,400. We will credit supplies expense for $1,300. We will credit utilities expense for $2,600. And our total in debits, our total in retained earnings debit will be $35,900. What this closing entry does is it zeroes out what we call temporary accounts, revenues, expenses, and dividends. Any account in the income statement is temporary. And dividends are not in the income statement, but they are closed out also. Once we have prepared these closing journal entries, We can then post them to these accounts here. And the only accounts that are affected would be retained earnings, has a new balance, but our revenue and expense accounts are all zeroed out. Do you see? Our revenue is now zero. Our interest revenue is zero. All of our expenses must be zero so we can start the next period ready. So as you see here, after we then post those closing entries to our books, do you see the only accounts left are only balance sheet accounts? Our revenues, our expenses, and if we had dividends, our dividends aren't on here anymore. They're zeroed. So we have our balance sheet accounts, and all the revenues and expenses were flowed into our retained earnings, which is 30,100, which is what it showed on our balance sheet. It's showing that because it showed it on our statement of stockholders' equity here. You see, we started with a balance. We added our net income to end with a balance. Do you see that closing out our revenue and expense accounts? All it did was permanently put the revenues and the expenses into our retained earnings so we can start the next period fresh. So the last piece is, once we've prepared those closing journal entries, we can then prepare the post-closing trial balance. The only purpose in this is to make sure we have no temporary accounts open, which we don't at all. This was a very comprehensive problem, but it really allows you to see the process of our unadjusted trial balance, our adjusted journal entries that we then use to prepare our adjusted trial balance. From that, we prepare our income statement first, our statement of stockholders' equity, and our balance sheet. Once we have prepared our financial statements, we need to get ready for the next period, which then means we prepare closing journal entries, which only close out our temporary accounts, the revenues, the expenses, and the dividends, to zero them or to flow them into retained earnings. So the only thing we have left are our permanent accounts, so we can get ready for the next accounting cycle. Now, this number 9 shows us, here is the general ledger of Red Storm Cleaners, and it gives us the debits and credits to date. Then it tells us all the transactions they had during the year. So on January 1st, here's our beginning trial balance. And you see it does not have any revenues or expenses in it, or dividends. Here are our transactions for the whole year. Then it tells us, here are the adjusting entries. So then what it wants us to do is record each of the transactions in the journal tab, review the general ledger and the trial balance tabs to see the effect on these accounts, record the adjusting entries, review the trial balance, prepare an income statement, prepare a balance sheet, and record the closing entries. It's a lot, and I'm going to do it all with you. Okay? So, the first thing we do is in our general ledger journal, we are going to take these transactions and record them. Okay? We're going to take these transactions, we're going to record them. When it says provide services to customers for 60,000, of which 21,000 is on account. Well, doesn't that mean we did receive cash of 39,000? So you see in this journal entry, we show the date March 12th. We debit our accounts receivable for 21,000. We debit our cash for 39,000. And we credit service revenue for 60,000. This is a little unique because we have 2 debits and 1 credit, but don't they still balance? Next, we collect on accounts receivable 18,000 from our March 1st transaction. So in that case, we debit our cash for 18,000 and we credit our accounts receivable for 18,000. We're not going to receive that anymore. We did receive it now. Then on June 30th, we issued shares of common stock in exchange for $6,000 cash. Don't we debit cash for 6,000? Credit common stock for 6,000? On August 1st, we pay salaries of $7,500 from the 2020 year. Well, if we look up here, do you see we have a credit to salaries payable of $7,500? It's a little late, but we're finally paying that. So won't we debit our salaries payable for $7,500 and then credit cash for $7,500? Doesn't that make sense? Next, on September 25th, we pay for repairs and maintenance expense for $13,000. We would debit our repairs and maintenance expense, $13,000, credit cash, $13,000. Then it says purchase equipment for $8,000 cash. Debit equipment, $8,000. Credit cash, $8,000. Then pay $1,100 cash dividends to stockholders. Wouldn't we debit dividends for $1,100 and credit cash for $1,100? Is this making sense to you all? Anybody?
Yeah, I understand the entering general journal entries, but I got stuck a little bit later in this problem.
Okay, so we're going to keep going on, guys, okay? I'm going to let you catch up with me if that's okay, if you need to. I guess if someone needs me to just sit right here, will you just yell out and say sit? Otherwise, I'll move on.
Yeah, could you sit right there for a second?
I will. And will you tell me when to move on?
Yep.
Jim, I'm going to bring Casey in here.
All right, I'm good.
All right, one sec. I have a little 3-pound dog who's 14, who's blind and deaf and slowly dying. She gets these wounds all over her body. We have to take her in every couple of weeks and get a big shot so she gets rid of these like scabs everywhere. So she's become our child. Sorry, you didn't need to hear that, but that's what's going on in my world. It's easy. Now, the journal adjusting entries say accrued salaries at year end amounted to $19,600. What does that mean? It means salaries have incurred, people have worked, but we haven't paid yet. That is an adjusting journal entry showing salaries expense of $19,600, and we credit salaries payable for $19,600. Next, depreciation for the year on the equipment is $5,000. We debit depreciation expense for $5,000. We credit accumulated depreciation. Remember that contra account I was telling you about for $5,000. Then it says office supplies remaining on hand at the end of the year equal $1,200. So how are we going to adjust that? Well, let's look at where the supplies were. They were at $4,000. Did we add any supplies? I don't see that we added any supplies. Okay. So if we would have added supplies, we would have taken this 4, added our supplies, and then if only 1,200 is on hand, we know we've used up the rest. So what they're telling us is this figure now needs to be 1,200. Well, in order to make this figure 1,200, 1,200, we are going to need to credit 2,800 in supplies to bring this down to 1,200. And what is our debit? Our debit is supplies expense for 2,800. We credit supplies for 2,800. Does that make sense? Now, the general ledger just will, I believe, it's automatically inputting everything that we've created a journal entry for. Now, because I'm showing you the full deal, it's also has some things in here we don't need yet, the closing entries. But from this general ledger, we would then have the trial balance you need to then create the income statement, and your balance sheet. Now, in my scenario, you see my income statement is zeros because my closing entries have already happened, so it doesn't show, what the real income is. But the service revenue in your income statement should be 60,000. So your income statement, this service revenue should be 60,000. It's not going to let me do it, but it should be 60,000. And then you should have expenses. You should have a debit to salaries expense for 19,600, repairs and maintenance expense for 13,000, depreciation expense for 5,000, and supplies expense for 2,800. And you should have a net income of, it looks like 19,600 should be what your income statement net income is. Does anyone see that? Can anyone help me on that?
So it looks like it like autofills it with the numbers that you have, but it's still not doing all the numbers. Like I filled in all the journal entries just like you have it. And I had already had that done, but my general ledger, when I check my work, it says it's not done. It won't.
So read to me what service revenue says. Here, I'll go out.
It has it all zeroed out.
Because you've already done your closing entries, probably. It's because your closing entries have already happened. Let me just get in here and do it myself here.
But it won't say it's completed.
Okay.
Does that make sense?
Let me just go in here and do this. Okay, so what we need to do is create these journal entries. Okay, so we have cash. What did I say, guys? 39.
Accounts receivable was first, I think.
Okay, accounts. And then we have service revenue for 60, right?
Yeah.
Then record the accounts receivable collected, cash, 18. Accounts receivable, 18. Then issue common stock in exchange for cash, cash, 6. Oops. Hey, oh, cash dividends. Supplies expense. What did I tell you guys that was? 2,800, right?
Yeah.
Okay. So view general journal. So that should be done. So our trial balance should be here. What's wrong?
Yours isn't complete. You still have a couple more things to enter. There should be 12 and 13 for the general journal.
I'm sorry.
If you just click on view my journal entry worksheet.
That's it. I'm sorry, guys. Okay. No, this is cash. Okay. Thought I had everything done because these are reclosing entries, which I don't want to do yet.
Do you not need to do number 11, 12, and 13 in
Not
it?
yet. Not yet. So what I'm trying to do is I'm now trying to create my, did I just lose everything I just did? Oh my goodness.
No, you're doing the next problem.
Oh, Lord. Okay. So basically, now what I want to do is look at my trial balance, which I balanced. The reason I hadn't balanced earlier is somehow I had no journal entry required where that cash was. So now if I look at my income statement, it doesn't just automatically fill it in for me, does it? So my income statement is service revenue of how much? 60. My expenses, I guess I don't have an advertising expense. What do I have? I know I have supplies expense, depreciation expense. I know I have
Salary expense.
repairs and maintenance expense. What did you say, sweetie?
Salary expense and supplies expense.
Salary.
Salaries and supplies. Is that it? Yes. So this is my income statement, isn't it? Right? Let's check my work. Looks like that's my income statement. Now I go to my balance sheet. So my balance sheet, I need to show where things go. What are my assets? I have cash. I also have accounts receivable, don't I? I also have equipment. Don't I have accumulated depreciation? Am I missing? Oh, supplies. I have supplies too. Right? I guess
Yeah.
my equipment needs to go here. So my assets are my equipment, and then less the accumulated depreciation. What are my liabilities? Salaries payable? Do I have any other liabilities? My common stock, my retained earnings. There's my balance sheet. Does that make sense, guys? What they're trying to have you do here is they're trying to make you fill in what goes where. So they want to know that you know that cash is an asset, that service revenue is a revenue, that expenses go in the income statement. They're making you fill it in. You see what I'm saying? Then after this, after we've prepared this, they then want you, did I just do the next? They then want you to go and close out these accounts. So now they want us to go to number 11. Close the revenue accounts. So we will debit our service revenue for how much? What was our revenue, guys? Well, I'll tell you. It was 60,000. They want us to close out that account. Then they want to close out our expenses. Our expenses were we had a supplies expense for 2,800. We had salaries expense for how much? We had repairs and maintenance expense. expense. Salaries expense was 19,600. Repairs and maintenance expense was 13,000. Our depreciation expense, 5. Do we have any others? I feel like we're missing one. Salaries, repairs. Appreciate. So this should be 22,600, 27,600, 30,400. Okay, my number's wrong. What is that balance? 5, 78, 40,000, right? Is it 40,400?
Yeah, that's what I said.
That's it. Sorry about that. Then it's going to want me to close out my dividends. Cash dividends were 1,100. 1,100. So it's going to want me to close those out into retained earnings. No, dividends. Okay. Now, someone's got their speaker on. Y'all mute it. So I believe should be completed. What am I doing wrong? Is there anything else? So my income statement will now show nothing because I've zeroed it out. The balance sheet will be the exact same. So does that help you guys that we're having problems? Alicia, were you having who was having problems on this?
It was me, but it still says it's not completed. That's why I don't understand.
Okay, I'm gonna let you share your screen. Do you mind sharing your screen?
Give me a second.
Here, I have to stop sharing, and I have to let I think you should be able to go and share your screen.
Mine says it's incomplete too.
Can somebody share it?
Mine says it's complete and correct, so I'm not sure what I did to get that to complete.
If one of you, well, McKenna, I'm glad yours does. McKenna, I'm sorry, but did I answer your questions on the retained earnings?
Kinda. I just don't understand how you got those two numbers about like the 43,600, I think it was, and the 35,900. I didn't understand how you got those
Okay,
numbers.
are you talking about this account, this one, or the previous problem?
The previous problem.
And can you just refresh my memory where, you know what? After everyone's gone, can you stay on so we can go through it?
Yeah, sure.
Okay.
Actually, that I do want to see that too, because that part, it took me forever to finally get it, but I would like to see an example. Like I did figure out the number eventually. I found it through the data sheets by just like clicking back and forth 1,000 times, but it's the one where it has like a ton of boxes to fill in with zeros.
Yeah, that's a pain, right. We'll look and see. I'll basically put up the solution so you can see where you're off, okay? Now, guys, when someone is saying it's incomplete, can someone share that screen?
Yeah, I can right now.
Well, I just have
Okay, let me unshare my screen, okay? Okay, can you share your screen?
I'm trying. It says host disabled participant screen sharing.
Okay, let me see what I'm doing wrong. Maybe I didn't let you guys do it. Let's see. I'm sorry. So let me just go back in here and show you what I am going to show you is, let's get back in here.
So mine was incomplete. I went to my income statement and went down to my total expenses and went down to and select income, and it said, and then went to check it, and now mine says it's complete.
Okay, it might just be a total expense number you're missing, or
It's if you go to your income statement and at the bottom where it says total expenses, and there's that blank right below it, how you have net income on yours.
yeah.
I didn't have that on mine. So
So you
I
need
just
to add it.
need to add that.
Need to add net income, guys.
Then mine became complete.
Mine won't let me add the net income underneath it on my income statement though. That's my issue.
Do you
Did
have
you
total
turn your
expenses here?
questions?
I have total expenses of 0.
Well,
And then
your net income, you should be able to click on that net income number.
yeah, the box under it doesn't let me click on it.
Are you in your questions? Are you still under the?
Check my are you at check your answers, or are you back to where you
Oh,
can?
you know what I was?
Yeah,
Okay.
I've done that a lot too.
Still says
Okay.
it's incomplete though. What the heck?
Okay, so you know, again, if that's your only issue, just email me and say, I got it all. I don't know what's going on. Do not let it saying incomplete like keep you working on something when you know you've done 90% of it, okay? I will give you credit for that. Let me know, okay?
Could I stay after and like see what's going on with this?
Of course.
I want to know.
I might have to get out of my meeting and let you guys share, because I don't know what I've done wrong. Okay, now this number 18. This is just like this one, except some different numbers. And it's the same principle. We've got the general ledger here. we've got some transactions and some adjusting journal entries. So for those of you who want to look through here, we've got general journals provide storage services for cash, 134,100, and on account 52.2. UCI debited cash 134.1, debited accounts receivable 52.2, credited service revenue for 186.3. Any questions on that one? Collect on accounts receivable 51.5. We debit our cash 51.5. We credit our accounts receivable 51.5. April 25th, we received cash in advance from customers. What does that mean? We didn't do the work yet. Debit cash 12.9, credit deferred revenue 12.9. May 6th, purchase supplies on account 9,200, debit supplies, credit accounts payable. Pay property taxes 8,500, property tax expense, credit cash. Pay on accounts payable 11,400. What are we going to do there? What are we going to do? Debit what? Credit what?
What's the question? What's
Pay
the,
on accounts payable 11,400 September 10th.
could credit cash and
Mhm.
debit accounts payable?
You rock. Debit accounts payable 11,400, credit cash 11,400. Next, pay salaries 123,600. Debit salaries expense 123,600, credit cash 123,600. November 20th, issue shares of common stock in exchange for 27,000 cash. Debit what?
Cash,
Credit.
common stock.
Excellent. December 30th, pay 2,800 cash dividends to stockholders. Debit.
Dividends,
Expense.
Credit.
cash,
Awesome. Then it says our adjusting entries. Insurance expired during the year is 7,000. Do you see up here we have a prepaid insurance? So what are we going to debit and what are we going to credit? What we debit insurance expense for 7,000 and credit our prepaid insurance for 7,000. Right?
yes, ma'am.
Next, supplies remaining on hand at the end of the year equal 2,900. if we started with 0 supplies and we bought supplies of 9,200 and we have 2,900 remaining on hand, how much did we use up?
6,700.
Is it 6,700? 6,300. So supplies expense is 6,300. We credit our supplies of 6,300. Okay? Now it says we provided services of 11,800 related to cash paid in advance by customers. Do you see up here we have some deferred revenue of 5,800? And then we also had 12,900 here in deferred revenue. But it's telling us we provided 11,800 in services. So wouldn't we debit deferred revenue 11,800 and we credit our service revenue of 11,800? That makes sense? So after we've done those various transactions, we would have a trial balance. Now, I know my trial balance isn't going to be right because I'm showing all my revenue accounts have been zeroed out. You know, so this isn't going to be right. But from your adjusted trial balance, you should be able to create an income statement. Then you should be able to create a balance sheet. Once you've done those, you'll need to close out your temporary accounts. And to close out those temporary accounts, you're going to close out your revenue first. You're going to close out all your expenses. And you're going to close out your dividends. So these are pretty much all the same. It's very cumbersome, but guys, do you see how you really get a total understanding of preparing the journal entries, of understanding what adjusting journal entries are, of creating the adjusted trial balance, from that, preparing your income statement and your balance sheet and your statement of stockholders' equity, and then closing out your accounts. I mean, there's so much you've learned in 3 weeks. It's nuts. But I don't know another way to get you here than to just go through the work. Does that make sense, guys? I am going to end this chapter 3 right now by turning off the microphone, and then we will keep talking here. So